Gold continues to struggle post FOMC as there are now higher odds of a U.S. rate hike in December, which is pressuring the metal, pushing it to a 4-week low overnight. How is the technical picture looking for gold ahead of Friday's big jobs report? With us now is Jim Wyckoff, a senior technical analyst with Kitco Metals. Thanks so much for being with us.
Hello, Danielle. Always nice to be with you.
Well, good to have you back, Jim. Let's look at gold's price action lately. How do you see gold set up here on the first trading day of November?
Daniela, last Wednesday we had that hawkish FOMC statement, and ever since that time, the gold market and silver have been backpedaling. New 4-week low in gold on Monday morning, the first trading day of the month. So the technical picture has deteriorated the past week or so. The bears have the near-term technical advantage, and that means the path of least resistance for prices in both gold and silver will probably be sideways to lower in the near term.
Well, I'd like to talk about a special report you did for us on Kitco.com, looking at a longer-term chart in gold. You said it may be showing signs of a long-term price low for the metal. Can you elaborate here, Jim?
Daniela, Fibonacci analysis goes back many decades. It's a valid form of technical analysis. It's not well known even by the general technical investing public, but price action in gold, the past few weeks has seen prices drop to a 50% retracement of the all-time high, dating all the way back to the low that was scored in 2001. So we've retraced about half of that uptrending price move. So we're right about at that halfway point. If we can trade prices sideways in the next few weeks or a couple of months, maybe few months, the higher the odds are that that 50% Fibonacci retracement will mark a major low.
All right.
Now, if we drop to a new for the move low, drop below this year's low, all bets are off, and you're probably going to drop prices to the 38% retracement level basis Fibonacci.
All right, Jim, quick thoughts on silver. The metal also struggling on the back of last week's Fed statement. How do the technicals look for the metal?
Daniela, quite a reversal in the silver market. We saw a big upside breakout, multi-week high early last week, and then we saw gold sell off after the FOMC statement. Silver followed, so silver has once again returned to a bearish posture. I strongly suspect that the silver market is now tethered to the gold market, and if gold prices trade sideways, slower silver is going to do the same.
All right, Jim, on that note, let's wrap with your Wyckoff market rating for gold and silver this week.
Danielle, I'm giving gold a Wyckoff market rating of 4. That's in the bearish camp. Silver has a Wyckoff market rating of 3, and that's a little further into the bearish camp. Technical resistance for December COMEX gold is located at 1150 with support at 1100. For December COMEX silver, we've got overhead resistance at 16 and support at 15.
Jim, thanks so much for your thoughts. We'll see you next week.
Thank you, Daniela. Bye-bye.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.